Hey everyone, welcome back to Money Gist Top 5. I'm Misi Dada. 3 deputy governors of the Central Bank of Nigeria have just been honored for their outstanding contributions to the country's financial sector. Dr. Mohammed Abdullahi, Ms. Usoro, and Dr. Bala Bello were all conferred with the title of Distinguished Honorary Fellows by the Chartered Institute of Bankers of Nigeria, CIBN. The recognition came during the 2025 CIBN Fellowship Investiture held at the National Arts Theatre in Lagos, an event that brought together leaders from government, banking, and academia to celebrate excellence and ethics in the financial industry. CIBN President Professor Pius Deji Olarewaju described the ceremony as a milestone, saying the award honors professionals whose work has strengthened Nigeria's economy through integrity and innovation. In total, 687 professionals were recognized this year, including 21 honorary fellows, 440 elected fellows, and 225 senior members. The keynote speaker, Dr. Inyoluwa Aboyeji, the Chief Executive Officer of Future Africa and co-founder of Andela, spoke on banking beyond boundaries, stressing how technology is reshaping banking and expanding financial inclusion across Africa. Professor Olarewaju also highlighted the sector's progress, revealing that electronic payments hit 384 trillion naira in July this year, with mobile and POS transactions soaring by over 200% year-on-year. He credited the central bank's reforms for boosting investor confidence, especially after Nigeria's removal from the FATF grey list. He added that bank support for agriculture, technology, and SMEs helped drive Nigeria's 4.23% GDP growth in the second quarter of the year. Looking ahead, the CIBN announced a new Human Capital Development Fund to tackle staffing shortages and digital skills gaps by training and reskilling young professionals through its Banking School project. As the event wrapped up, the new fellows were celebrated not just for their past achievements, but for their role in shaping the future of banking in Nigeria. Nigeria's external reserves are on the rise again, up by $540 million in just 2 weeks, from $42.63 billion on October 13 to $43.17 billion by the end of October. That's about a 1.3% increase in half a month and roughly 1.8% growth for October overall, according to fresh data from the Central Bank of Nigeria. Now here's the interesting part. Not only did the total reserves grow, but the liquid portion, that's the part the CBN can actually use, also improved, climbing from $41.98 billion to $42.55 billion. Meanwhile, the blocked reserves, basically funds tied up in commitments, dropped slightly from $656 million to $618 million. This means the reserves are becoming more liquid and efficient, giving the CBN more flexibility for trade settlements and currency stability. Analysts say the steady build-up shows renewed market confidence, with consistent daily inflows likely coming from oil exports, diaspora remittances, and capital importation. Between October 20 and 30 alone, reserves gained nearly $380 million. According to United Capital Research, Nigeria's external reserves now provide over 8 months of import cover. That's one of the strongest buffers the country has seen in over 3 years. The firm says improved oil receipts, stronger remittances, and disciplined forex management are helping Nigeria rebuild its external position, and that could help ease pressure on the Naira and stabilize the exchange rate in the short term. In summary, it's a positive sign Nigeria's external reserves are not just growing but becoming healthier and more accessible, showing renewed confidence in the economy heading into the final quarter of the year. As Nigerians await the government's new tax reform laws that will kick in from January the 1st next year, Chairman of the Presidential Fiscal Policy and Tax Reform Committee, Taiwo Oyedele, says 50 tax exemptions and reliefs have been approved under the new framework to ease the burden on low-income earners and small businesses. In simple terms, it means if you earn the national minimum wage or less, you will not pay income tax, just as anyone earning up to 1.2 million naira a year is fully exempt, and those earning below 20 million naira annually will enjoy reduced payee. There are also personal deductions for pension, health insurance, housing loans, rent and life insurance. Pension funds, gratuities and compensation for job loss up to 50 million naira are all tax-free. On capital gains, you won't pay tax when selling your own house, 2 personal cars per year, or small shareholdings below 150 million naira. For businesses, small companies with turnover under 100 million naira will pay 0 company income tax. They'll also get reliefs for hiring new workers, paying wage increases, or investing in agriculture and startups. No development levy, no withholding tax for small manufacturers or farmers. And when it comes to VAT, expect 0% or full exemptions on food, rent, education, healthcare, diesel, solar equipment, agricultural inputs, baby products, sanitary items, and even electric vehicles. Finally, stamp duties won't apply to small transfers, salaries, or share transactions. In short, this reform package aims to simplify Nigeria's tax system, support small businesses, and put more money in people's pockets. President Bola Tinubu is asking the Senate to approve a fresh 1.15 trillion naira domestic loan to help plug the gap in Nigeria's 2025 budget. In a letter read by Senate President Godswill Akpabio during Tuesday's plenary, the president explained that the borrowing is meant to bridge funding shortfalls and keep key programs and projects on track this fiscal year. According to Tinubu, the loan is part of his administration's broader plan to stimulate economic growth, boost infrastructure investment, and strengthen social welfare initiatives for Nigerians. The request has now been sent to the Senate Committee on Local and Foreign Debt, which has 1 week to review it and submit its recommendations before lawmakers make a final decision. This latest request fits into the government overall financing strategy, combining both domestic and external borrowings to sustain ongoing development projects. Just last month, the House of Representatives approved Tinubu's plan to borrow $2.35 billion and issue a $500 million sovereign sukuk in the international market. Earlier in July, the Senate also cleared a $21.5 billion external borrowing plan and a 757 billion naira bond to settle outstanding pension arrears. Nigeria's total public debt now stands at about 149 trillion naira, up nearly 23% year-on-year, according to the Debt Management Office. Analysts say that while domestic borrowing reduces foreign exchange risks and deepens the local capital market, it also raises concerns about Nigeria's rising debt levels and repayment capacity. For now, the administration insists the loans are necessary to drive growth, build infrastructure, and improve citizens' welfare. Nigeria's Naira opened the month under pressure, falling sharply following comments by U.S. President Donald Trump threatening possible military action against Nigeria over alleged religious persecution. Official data shows the currency weakened from 1,421 naira 73 kobo to 1,436 naira 34 kobo to the dollar, a 15 naira or 1% daily decline. The parallel market also saw losses, with rates hitting around 1,455 naira per dollar. The drop followed Trump's post on Truth Social, where he designated Nigeria a country of particular concern and directed the U.S. Department of War to prepare for potential action if alleged Christian killings persist. The remarks triggered investor anxiety. Nigeria's dollar-denominated bonds were among the worst performers globally, with the 2047 issue sliding 0.6 cents to 88.26 cents on the dollar. The Naira's pullback comes after weeks of strong performance. It had appreciated more than 20% in October amid rising reserve, which now exceeded $43 billion, and tighter CBN policies. Globally, the US dollar strengthened for a fifth consecutive day, supported by cautious outlooks on further Fed rate cuts. Gold prices slipped below $4,000 per ounce, reflecting weaker demand amid geopolitical tensions. Analysts say Nigeria's markets could remain volatile in the short term as investors monitor both global monetary shifts and political signals from Washington. That's your Money Gist Top 5. I'm Emisi Dada. Stay informed on Nigeria's economy, markets, and money moves. Like, share, and subscribe for weekly business explainers that makes sense. See you in the next video.